Well, let's go back to inflation for just a bit. Is gold typically a leading indicator or a lagging indicator of inflation? Which comes first?
I have found it to be a lagging indicator that's not tick for tack, so to speak. In other words, if the dollar devalues so much and goods cost more, you'll see gold rise, but it will lag far behind that. The key is that when you look at it on a long-term basis, it still has approximately the same buying power that it did 100 years ago. In that period of 100 years, you can find all kinds of instances where it did not keep up with inflation. But as a whole, it does. And the analogy would be like the housing bubbles that we get, where it gets overpriced, they crash, they go up too high, too fast, they come down too fast, and then they kind of end up in the middle. It's that balancing act. And that's how I think gold reacts in terms of it being a hedge against inflation.
Okay. So what's your forecast now? Give us your medium and short-term outlook for the price of gold.
Well, what I'm looking at, and I'm going to put a different chart on the screen, and the interesting thing is this, and that is when you're trying to forecast a new possible high, as a market technician, we have no historical data to base it on. We know it's been as high as 2088 and 2078. Now, from what I'm doing, which is candlesticks, Elliott wave, and Fibonacci extensions, it is a Fibonacci extension that is really the best tool I know to look at where it could go, especially with no technical data. And based on that, I believe by the end of the year, gold could reach between $2,100 and $2,300 per ounce.
$2,100 and $2,300 an ounce.
Between those 2 points.
Okay, so you're calling for gold to hit new all-time highs. When
Correct.
Exactly? Well, not exactly. I mean, no one knows exactly. Ballpark it for me.
That's the hardest thing. I mean, extensions do not give timelines. Elliott wave doesn't give an actual timeline cycle. And candlestick patterns simply show you pivots. I am saying by the end of the year, which isn't that far off, but I wouldn't be surprised if we got or challenged the record high now within 2 to 3 months. I don't think it'll happen overnight, barring something, a black swan event, something we're not expecting.
Well, Gary, okay, so let's say it happens before the end of the year, or even next year. It doesn't matter. Once it hits that level, what's next?
According to the Elliott wave count I'm using, and the numbers on there that are big are intermediate. And we're at the conclusion of the 5th out of the 5th wave, which means after it hits that high, we will enter a protracted, possibly multi-year correction, just like we saw middle of 2011. We had from that till the end of 2015, 2016, where it went from those high numbers and then oscillated between 1,800 and 1,500. When it broke through 1,500, it didn't get to the low, which was 1,020, till really the beginning of 2016. If in fact this count that I'm using has any validity, people swear by Elliott wave, people think it's nonsense, but I found it to be very insightful. What it says is that after we hit these all-time highs, we will go into a multi-year correction or an extended correction. And the reason I feel good about that is that means that things have become peaceful again. I'll welcome that, actually, but I'll certainly want to profit on the way up.
Well, we don't have a lot of room to climb before we hit this multi-year correction. I'm not challenging your forecast. I'm just saying, I'm just putting things into perspective right now. It's what we're at 1940 today, 2,100 to 2,300
is not that far.
It's not that far.
But it's still $350 away. The last rally was $300. I believe that based upon the fundamentals and how they unfold, in other words, if they can't get a handle on inflation globally, because the EU has experienced a lot of it now, that's going to take gold higher at a quicker pace. And the crisis right now in Ukraine, if it's not resolved, that will add to the speed at which gold rises. But if we look at it right now, it's been trading sideways. So I still believe that even a timetable of 3 months, 6 months, or the end of the year, in the big picture, is a fairly short period of time.
Let's talk about, well, okay, so once gold corrects, like you've anticipated, following the rise to $2,100 to $2,300, now you said earlier that gold is somewhat a lagging indicator for inflation. If gold does correct from new all-time highs, does that imply that by that point, inflation would have stabilized somewhat? We'll see inflation spike to a certain level, I don't know which level, 8%, 9%, and then come back down?
It certainly could be. The only issue I have is if we're at 9%, that's the CPI, PCE, which is what the Fed uses, is well above 6%. Their target is 2%. So to get it to that level, it's got to be a multi-year process. And inflation, I don't believe, will come down that quick.
Oh, well, hold up. How committed do you think the Fed, I'm not saying this in jest, I'm genuinely curious. How committed do you think they are to actually reaching that target by this point? I mean, if I tell you, my personal, this is just a hypothetical, example. If I tell you my personal budget for clothes is, I don't know, $100 a month. I've already spent $500 a month. Okay, that's way above my $100 a month target. At this point, I'm saying to myself, what the heck, what's another $400 this month? Or next month, let me just raise my target. You know what I mean? It's like I've way surpassed my target. At this point, what can I do to bring it back? Well, I'm not even motivated to do. I'm just going to raise my budget.
That's one way to look at it. But to me, what's most important about what the Federal Reserve is doing is it's going to be an extremely difficult process to have what we call a soft landing. Take this high level and bring it down to an acceptable level without it causing a recession, without it really impacting the jobs that are being created. You can't slow the economy down and expect a landing that is anything but rocky at best. A soft landing is what they're shooting for. But when the inflation level is so high, to get it to a number so much below that, I can't conceive of how they'll do that and do a soft landing.